taking a look at several stock picks, stretching across all different sectors for you. So let's go through them one by one and why you might want to consider these for your portfolio. Luke Lloyd, President, CEO of Lloyd Financial Group, is with me now. Thanks for being here. So we are at a record-setting day here with the S&P and the NASDAQ, even gold. It's at a record today. Are you buying anything today? Do you wait for pullbacks? How do you feel about this market going forward?
Yeah, we bought a ton of stuff last week. I'm sure we'll get into that. But let's go with the broad overview for this question here, because you have to understand kind of where we're at to kind of see where we're going, at least with our ideology and our portfolio. So we take a look at Lloyd Financial Group, we take a look at three main things. Every single morning, I have a newsletter that goes out at 8 a.m. At the top of the newsletter, it's a chart that talks about liquidity, talks about inflation, and it talks about growth. Those are the three things we base our entire portfolio on. And when it comes to the growth side, the economy seems to still be growing, whether it's GDP or other kinds of areas. Growth seems to remain pretty strong. Inflation, it's obviously come down a lot. We're not at the 2% target, but we're at 2.9%. Things are looking pretty good there. And then when it comes to liquidity, I mean, of course, liquidity is still very strong when you deficit spend $2 trillion a year in the economy. And there's still a lot of money floating around from the COVID era that frankly has not gone through yet. So M2 money supply is what I'm referencing there. So all of that kind of gives you a good kind of backdrop. Now, when it comes to the inflation, I'm not concerned about inflation rising because really throughout history, except for the 70s and 80s oil shock, and then 80s was kind of weird after the oil shock, you really don't see a stagflation environment where unemployment goes up at the same time that inflation goes up. So I'm not too concerned about inflation because the one thing that I'm biggest concerned about is actually the labor market if I had to pick one specific area. So the backdrop still remains pretty strong, not too concerned about inflation, not too concerned about liquidity, and growth might slow down if we get unemployment to crack.
All right, so let's get to our first name. First up, you have Dow. Tell me why this name is important for a portfolio. Why did you select this?
So we think of things in kind of two different ways. We want to have the growth tilt in some areas because of the backdrop I just referenced, but we also want to have the value tilt. And this stock, I think it got cut like 50% or half almost so far this year. I mean, it was a $40, $50, $60 even stock at one point. This stock's now down to $24 this year. We bought in the low 23s last week on one of the dips that had about 4 or 5% drawdown. But this is a manufacturing play, Dow Chemical. It was talked about stock a lot throughout history. Now it's kind of perceived to be more boring because it is kind of just that manufacturing chemical materials kind of company that isn't kind of the sexy company that people want. But this stock's been unloved. The balance sheet looks absolutely phenomenal. It trades extremely cheap PE, EV to EBITDA relative to its peers, high dividend yield of 5%. This is a recovery value stock in our portfolio. Again, nothing too exciting, but it's a value stock that is definitely beaten down a little too much.
Understood. I mean, I wanted to call it Dow Chemical too. I know that's part of the story there, but I still want to call it Dow Chemical, like the old names, right? We always said America Online or whatever. Let's talk about Circle. I mean, we're going from the old days to the new days, very new days of Circle. Why is this one in the world of crypto and stable coins and all that so important right now? Where does that fit into a portfolio?
Yeah, so it does fit around that stable coin, adopting, accelerating the DeFi side of things, payments, tokenized finance. It seems like it's more in the headlines today. I was actually on a show this morning with some disruptors like the ex-CEO of SoFi, who has a new company. A lot of really cool things happening within that industry. And frankly, it looks like it's getting some government support. So when the government gets involved and starts kind of getting areas more excited, allocating more money, that could be bullish. So what I'm referencing is the future's looking good for this kind of technology. Now, the valuation is where you have to kind of watch out for. Circle was a $250 stock. I think it's down to $120. I'm not buying it at $250. I'm buying it at $120. So frankly, in our portfolios, we just started getting growth focused again last week after about being 3 to 4 months completely out of tech names, completely out of growth. I think we've seen kind of some consolidation catch up in other areas. Now you can rethink growth. I'm not talking NVIDIAs. I'm talking these other kind of stocks that a lot of people don't talk about, but I think the backdrop looks really good for that DeFi payment stablecoin kind of space going forward. We'll see how PayPal does. That's one thing we're taking a look at. It's a competitor of Circle.
Right, and also let's stay in that realm because we had Bullish, former head of the NYSE here, Tom Farley, now the head of Bullish. What's the right idea here? Because this recently listed.
I was at the stock exchange the day it actually listed. So it was really cool. I think everyone was handing out, you were there, they were handing out all kinds of shirts and all kinds of gear. I was pretty excited. But look, Bullish opened up, I'm pretty sure around $60, $70 a share, hit $115 a share. I think it's closer down to $50 a share now, sold off a little bit. Look, anything when it comes to Peter Thiel, Peter Thiel knows what he's doing. A lot of his things win. When it comes to Elon Musk, Peter Thiel, these kind of guys, you want to get behind. So when the stock sells off 25%, the valuation looks a little bit more attractive. It plays like an exchange right now with leverage to crypto with the volume cycles, but I think there's a lot bigger case here when it comes to what it gets into, when it comes to stable coins and all this other different areas. I think the catalyst going forward is the institutional adoption of those tokenized assets and the spot Bitcoin ETF flows, needing liquidity venues like Bullish. I think there's a lot of backdrop, especially my 75-year-old clients that are calling me, it seems like almost every single week, asking, Luke, when are we going to own Bitcoin? When are we going to own Bitcoin? Well, we're not owning Bitcoin directly at this point. I'm buying Bitcoin directly again when it gets below 70, but I am buying the ancillary areas within that space.
Yeah, and I know you're always looking for valuation and trying to find the best bet. I mean, Bitcoin itself went above 116,000 today, and that was a nice move. I hadn't seen that lately. I mean, where do you think Bitcoin itself can go before I get to your next two stock picks?
Yeah, I'm looking at 70 grand now. I maybe have a little bit of a selfish tilt to that because I sold all of my Bitcoin, family's Bitcoin at 70. So, it was a good decision at the time. It dropped to 55. We never got back in just because I feel like the backdrop, even though it's somewhat strong, it still is a speculative asset class. And historically, actually, Bitcoin has been, if I had to pick one asset class and one commodity, whatever you want to call it, that I do the best in, it's actually cryptocurrency because Bitcoin, crypto in general, for the most part, it's all supply and demand. And right now, the demand's been pretty strong and supply is pretty constrained. But whenever we do get a downturn again, and historically, every like 3 to 4 years, you do get about a 70% drawdown top to bottom on Bitcoin. The question is, what's the top for Bitcoin? Well, if it's $120,000, 70% decline puts it like what, down to 40% or something like $40,000, somewhere around that area. So I am looking at some point to pick it up back below 70. This thing's going to be volatile for the next couple of decades. In the end, though, it's going to $1 million a coin. There's no doubt in my mind. In the end, whether it's 10 years, 15 years, it's going to go to $1 million a coin because it's too big to fail now at this point.
Wow, but those are some big projections, 70,000, 40,000. I mean, at least even 100,000 or lower, but you think it goes to $1 million at some point. Wow, I'm glad I asked that question. Let's talk about AST Spacemobile. Why is that on your mind?
Yeah, so this is a competitor of Starlink, and like I said, I wouldn't bet against Elon Musk, but there doesn't just have to be one player within the Starlink space telephone kind of Wi-Fi realm of things. So they were one of the first movers within this space. They have contracts now with like AT&T, Vodafone, Rakuten. They've got now FCC approvals. They've had many successful satellite launches. I remember I actually owned this stock very briefly. I'm pretty sure like around like the $10 area, $9 area. One of my biggest regrets is not holding this stock. I'm pretty sure it's hit up $50, $60 area, back now down to 40. This is a stock over the long term. It doesn't necessarily meet our value criteria, but it is growing very fast in a really sexy, cool space, and it has sold off a little bit. So this is a way, again, we're not saying that we want to own all growth stocks right here. What we're saying is it's starting to get time to own a little bit of growth in your portfolio. We're looking at some of those areas that have that demand factor. They don't have that supply factor. The only risk here is it might be a capital intensive space. It's not cheap to launch satellites here. So dilution is somewhat of a concern over the long term, but something you want to own, I think, right now at $40 a share.
All right. Well, then there's GitLab, which is down about 11% this year. It did run up to $74. I mean, at one point, it got very excited. It went from 26, over 3 years, it went from $26 up to $78. Now it's around 50. What's the potential here? Why?
Yeah, so it's end-to-end development operations kind of platform that consolidates all these kind of tools and chains and businesses, and it makes them a lot more cost efficient, and it produces cost savings for enterprises and businesses. More important kind of time ever to become more efficient with the AI revolution going on. I mean, I know in my business, I probably would have to have 4 or 5 more employees right now if I didn't have AI to kind of aid all the marketing and fun things that we're doing here. So every corporation corporation's looking to AI. Every corporation's looking to become more efficient. Just talked to a guy, younger guy, my age, late 20s. That is a unique, really unique expense saving platform for manufacturing firms specifically. This is going all around. I think the rise in AI software development demand is going to remain strong. It's going to get stronger. Strong enterprise adoption pipeline is going to remain strong. So this is another area to get in software as a service to have that more growth in your portfolio. The risk is competition with GitHub, which is kind of Microsoft, I believe, and Atlassian. There's a lot of different areas here. We're getting GitLab just because of some of the fundamentals that we're seeing within it. We like the evaluation where it's at, considering the growth rates.
All right, Luke Lloyd, thank you. President, CEO, Lloyd Financial Group. Great to see you, Luke. Thanks.
Thank you.